Hey, welcome back. We want to do a quick video to kind of talk about what's going on and what we're seeing for the future. Quint, obviously everybody knows why the market's been down for the last couple of days with the tariffs and everything that's happened. What is your outlook and view on what we're seeing right now?
Yeah, this is a tricky situation because, number one, the tariffs that were announced this week were obviously far greater than everybody anticipated, and the shock and awe is what's creating the market dislocation. So, what's happening inside of the market is you have investors that are sort of very quickly reassessing future earnings or profit potential for these companies that will be impacted. And you can look at, for example, a company that might, have 90% of their products manufactured in China, and we're going to have a 34%, tariff added to the goods, of products coming back. Well, either that's going to be absorbed by the company and or it's going to be absorbed possibly by the consumer. Right. One or both are going to significantly impact profits, cash flow, and ultimately the value of the company. Now, the tricky part is most people that we're speaking with, and us included, feel pretty strongly, as we wrote about this week, that individual countries will come to the table and try desperately to negotiate this. Right. So certainly there's countries like Canada that have come out, new retaliatory tariffs on China's side that came out this morning, which is interesting. We'll touch on that in a second. But nonetheless, most countries don't have the gusto or can really bring their tariffs any further. Yeah. They're already at max capacity. So there's been some murmurs of that. Vietnam would be a big one. There was murmurs today that Trump had spoken to the leader of Vietnam. That would be a big one because during the previous administration, a lot of companies diversified their manufacturing from China to Vietnam. Irrespective of what happens, it's market dislocation. Yeah. And people are, really trying to assess. And whenever you have that, and we've talked about this ad nauseum, and we're never going to downplay this because it's been a terrible, terrible week in the markets. But whenever you have this, investors tend to panic. Mm-hmm. They sell first and they ask questions later. And that's what we're seeing here in the market. Candidly, and anybody who tells you they know what's going to happen, run the other way. Right. They're definitely guessing. And so nobody knows what will happen here. But what's interesting, Logan, and you and I will obviously be spending, the next 72 hours or more digging deep, is that when stocks are sold indiscriminately across the board, you are going to have sectors and individual companies that are thrown out for no reason. Yep. And that's where the bargains come. So I want to be very clear. I don't think it's prudent if you're watching this, you're not a client, and you're going, oh my goodness, company XYZ is down so much, I should buy them. That's dangerous. Now, you might get it right. You might catch a bounce. Awesome. Good for you. But why that's dangerous is I would rather be looking across the landscape. Every company is basically trading lower, unless it's an uber defensive name where money is rushing to, like a Johnson & Johnson, Procter & Gamble, which also got hit today. But ultimately, there are going to be companies, let's call it A, B, and C, where all of these tariffs are really impacting A, maybe a little bit on B, and nothing on C. Yet all of them are being sold. And when I, have participated and been around institutional management, meaning billions upon billions of dollars, that's what they do. If they have to raise cash, they're not getting in there and going, let's sell this one, let's sell this one. No, they're selling across the board. So as crazy and as scary as this is, it will create opportunity. And I know that's hard. For those of you that have been with us for 20 years, you're like, of course it does. It always creates opportunity. For those of you that are relatively new, or maybe you're a new investor, this will create opportunity. We have to be patient, we have to be disciplined, and we have to see how it plays out, because many companies, if this continues, will sort of be left for dead, but they won't be dead. And that's where the opportunities will arise.
Yeah, so before we get to some of the other news of today, I think the country that you mentioned that's pretty much at the epicenter of all of this is China, and some of the retaliatory tariffs that they then put back on us. So talk a little bit about that side of things.
Certainly. So our administration estimated that the overall tariff and trade deficit and currency, quote, manipulation resulted in around a 60% or so tariff on our products being sold. Many people are debating whether that's true or not. I don't know the math behind it, and nobody quite can understand the calculation that they've run. But regardless of that, China went out and we imposed 34%. They imposed 34%.
Right.
So now what's interesting about that, Logan, is we don't sell a lot of products into China. There's just not a lot like they're not net consumers of a lot of our product. A lot of our products are made there and shipped back, hence the tariff situation and why it's impacting many of our companies. But we don't have a lot of products that go over there. I think the estimates are extremely small, but it doesn't matter because, again, this morning when we woke up and we were looking at the futures were flat. Well, then news broke, and then the futures sold off, and the market sold off. So, again, it's the uncertainty, how our country is going to retaliate, what's going to happen, et cetera. The best thing that can happen for markets right now is that an individual country like a Vietnam can come out and drop their tariffs. And then I believe our administration will drop tariffs, so there will be no tariffs on either side, and they would champion that trade relationship.
Right.
And that could be the model for other countries. My suspicion, again, just a suspicion, is that is what the government is working towards. Now, behind the scenes, and this is a little academically, and I know we're running a little long, but just bear with us, interest rates are dropping quickly.
Right.
Now, they're dropping out of fear. Money is moving into bonds. Bond prices are going up. Interest rates are going down. But that's good on two fronts. Home builders were positive most of the day today, which means lower interest rates should, in theory, stimulate the mortgage and housing market. That's number one. Number two, our interest expense on our debt is massive. We've talked about this. It is in line with the same amount that we spend on our national defense, $300 billion a year. If interest rate expense drops due to interest rates going down, that will actually shore up a lot of our deficit in our annual budget. That's a positive. So I know it's hard to well, how could there be a positive to all of this? Interestingly enough, interest rates going down is a positive over the long run.
Yeah, absolutely. And I think going on interest rates, we had a lot of news today that come out. The Fed came out and talked. They basically said they're going to wait on the data. They're going to watch and see more come out. They're not making any drastic moves right now. And they also had some jobs numbers that came out this morning that were still really strong. So talk about that a little bit.
Yeah, the jobs data that came out this morning. So first of all data that comes out is backward looking.
Right.
So it basically is January and February, I believe. It includes none of the latest, escapade that we're going through in the month of March and so forth. So nor does it really include a lot of the government workers that are unfortunately losing their jobs. They're getting severance. They're getting, in many cases, furloughed for the time being. So that is not yet hitting that information. The Federal Reserve is trying desperately, and I think Jerome Powell did a really nice job of this today in the conference call, to stay separate from the government,
right.
Not comment on tariffs, not as far as their opinion. Mm-hmm. They're commenting on the fact that it certainly could be inflationary, it certainly can slow the economy, but they're trying desperately not to give an opinion, and I applaud him for that. However, in my opinion, the Fed is way behind. They're always behind, but this time, instead of making a case about being behind. So, for example, during the early inflationary period post-COVID, what did they say? They waited on raising rates, but they said it's transitory. They gave an opinion. That was wrong. They should have said, we're waiting on more data before we act. Well, they kept saying, then they got pigeonholed into the transitory. Then they had to, acquiesce and then scramble and get caught up. Yep. They're doing the same thing now.
Right.
The difference is that they're not calling it, oh, we think this is transitory. They're just saying we have to wait for the data. Unfortunately, when the data turns, both economic and employment, it will be very rapid. So my anticipation is that the Fed is going to be forced to lower rates very aggressively and quickly, regardless of what the tariff situation is doing. So they're kind of, between a rock and a hard place. I don't know what will happen there.
Yeah,
but
and you had data that came out for the jobs that was higher than expected, but also a revision of last month's that
were
was
worse.
40,000
Yeah.
lower. So
They're certainly not helping the situation right now, because if they were coming out and being more dovish, then it would be a positive for the market. They're not doing that. So we have so many cross currents. And not to beat a dead horse, but I think it was middle of last year we wrote a piece talking about we don't know what it will be, but inevitably there will be something that comes up that derails the market. It will be in all the headlines. It's what we'll be talking about, etc. And here we are today talking now about tariffs. So we have to navigate through this. We have to watch. We have to wait. We have to be patient. And we have to remember that it's a long game. We've looked through portfolios for hours and hours and hours this week. And what I really like is asset allocation. Yep. Your risk is in line with your long-term time horizon. If you're retiring next Tuesday, you obviously do not have as much risk as someone who has a 10-year time horizon before retirement. In addition to that, we have been overly conservative, and we're looking across the spectrum of all accounts to take advantage of this weakness. So I feel like, I don't like seeing red. I hate it. I can't stand it. I don't like it in my accounts. I don't like it in any of our accounts. But I feel like we're doing a really good job being prudent with our views, with what we're doing, and we're being patient and unemotional, and that's successful investing over the long term.
Absolutely. We'll keep watching, listening, and giving you more information. Have a great weekend. Stay dry out there.
That was good. It's long, but it's excellent. People need it.